Okay, we're up and running, guys. Sorry a bit late today. I had a few issues. We won't be having the video today for some reason. It won't. Says it's there, it's recognising, but it just won't get the picture up. So I'll have to have a look at that later on and get that organised for Thursday. Hope we all had a good weekend also, and a bit of relaxing there. I know I had a bit of a relax, so it was nice. We didn't have too bad a weather on Sunday, so out for a bit of a ride in the morning, which was always nice. Trying to get that fitness back up. Trying to get that summer body up and running, so. Alright, so today, let's get into it. Once again, welcome to the live stream, TradeSetup. Now we've got a few less people on today. It looks like we're running late, sort of pushed a few people out. Going to have a bit of a chat today about some, obviously go over the markets as per usual. We'll have a look at what's happened on Friday. Not much happened on Friday night in the US, and we could be in for another quiet night tonight. Had a big drop previously because of the North Korea US argy-bargy, the egos out there for the two leaders. So they had a big drop, but it pretty much consolidated those lows on Friday night in the US. They pretty much held that support, but the European shares were down a bit further, so they dropped a bit more. I think maybe they were just playing a bit of catch up from the night before, as the actual equities they finish earlier on the equities, not the futures, earlier than the US do, a few hours earlier. So they tend to play a bit of catch up on the open, and then they might have held their lows as well. So the US would be interesting to see how they go tonight, the start of a new week. Where we actually popped up today, so we're up about, I think we're up about 30 at the moment. So we'll just get onto the market now, just see where we're standing. Yeah, up 32 at the moment, so not too bad. We'll go over a couple of the charts on the US, but what I just want to take a look at today is just a couple of charting patterns that I think, very important to take note of. And we've discussed them quite a bit. We've talked about shoulders in the past, but I think it's a key aspect to our trading. Well, I know it's a key aspect to our trading, but I think it should be something that everyone takes note of. Yeah, if you're going from a technical base, if you're trying to learn them, and there's different types of scenarios when they could be very important for management, and some for entries too. Just the way they can set up. So it's a good part of our trading repertoire that we'll go through today. Just seeing where the market's sitting at the moment. All right. So, and then what we'll do as per usual, just go through a few of the whack up any sort of charts you want to have a look at. Just put through the code. We'll take a look at those. We've also got I had a question through on an email. I'm just got to remember to go through that. On dividends, do we take much notice of dividends? So we've got, actually I'll get it up now. We've got IFL, which is coming up for a dividend. But, for me personally, I don't take a massive look at it. I do like to know when they are, if they're coming out, and sort of what's expected. But then for me, it's also got a lot to do with what the price action is doing. Dividends can come out. We all know that sort of it's a 20-cent dividend. They drop by the dividend amount, generally, as a rule of thumb. But it may not do that if it's a really positive-looking stock. I mean, that price structure on IFL is looking great. That's kicking higher. Hopefully, we're going to go through 11.50. That'd be nice. It could just drop by the dividend, hold, and then go again. But Telstra's another one. They've got the dividend out due out as well. So we traded that up here, and if that was likely, when a few people were thinking it was going to hold around that zone because the dividend was due out, then maybe drop by the dividend. Now, if it does the same thing, drop by the dividend amount, that's going to kick on the short position that we've got. But either way, on that sort, that price structure is looking very weak. So we've traded it. Ideally, we trade it using on the back of price action. It is good to know what the dividend is and when it's due out. But the main thing for us, and as it always is price action. So I guess I just answered that question there. Yeah, so you never know what's going to happen too. Like Paul just said, I mean, if say Telstra come out and cut the dividend, we'll probably have to look at that a bit twice. We're actually up on both of those trades. IFL, which has kicked on really strong. I'm not sure what that dividend, if anyone knows what it's actually due out to be. And Telstra. So both of those, one's a short, one's a long. They're both going, and then the price structure is looking good for a short on Telstra, and it's looking good for the long on IWF. And look at that weekly structure. That's great price structure. Just busted through the highs. So that's maybe one that could see a bit of profit taken coming into the dividend prior to that, because I mean, if you bought it for the dividend here, you're up quite a bit. You expect it to drop by the dividend, you probably just sell it prior to the event, but we'll see how that goes. Yeah, no, exactly. So a lot of that stuff is everyone's factoring in either way. I don't trade ever would trade purely off dividends. It's got to do with price structure, and a lot of times with a projected really nice dividend coming out, if the price structure looks weak, I just wouldn't buy it. I wouldn't care what the dividend is, because you tend to think that it's going to drop by that amount. So why buy into something that's generally starting to look weak and could potentially go weaker, and vice versa. If it's really strong and you buy it, you think, okay, the dividend's projected to be something that starts heading higher, you've got to take into account what's happened in the past. Where do you think people are placing themselves coming into the dividend? What type of history does it have with dividends as well? So it's not as, I guess in saying all that, it's not quite as easy. It's sort of a case-by-case basis for me anyway, the way I look at it. But again, like I said, it comes down to me for price structure. All right, let's... we'll just have a quick look at US markets, if they're going to look to change. This is, that's a bit of a bugger. Anyone that's following the alerts, we sent this one out this morning. It looks really, really nice. Look at that weekly chart, if you can see that clearly. This is EPAT Technologies. You can see that's pushed down. Is that all the data? That's all the data. So since it floated, it's pushed down. You know, obviously a few people selling on the float. 20 cents, it popped up to 25. Pushed down, spent a good part of 2015 and 16 hovering around. End of 2016, started kicking up, and then pushed down this year and built that high low. Now we're starting to come up again. So on a weekly basis, holding a high low around that 2 cent mark. I know it's a low trading stock. The actual, in the regards of the price to it, 2, 3, 4, 5 cents, that's quite low too for some. But the price action's there. It's looking really nice. You have that gap up, maybe good news. Bit of a pullback, held that high low, and we're starting to see this price action hold another inside higher low on the daily basis. I did think we might get a bit of contraction and build another little inside high low, and then off we go, off to the races. It looks like it's just kicked on today, so that is a true bummer. But anyway, that's looking good. What else do we have? Shares, that's what I was going to look at, wasn't I? Sorry, markets. There's not really much change, I guess, in the overall markets. I just want to see where the FTSE is and the DAX more than anything. Let me just find the markets, indices, and that's not, it's here. And price, here we go. So the Dow will just keep following through. That's a decent enough correction. Now, you've got to view it this in two ways. We all know it was getting a bit overcooked there. Is this going to be a nice little area where it's just another contraction like that, and we start holding some higher lows, then we go again for another run higher through the highs and build from here? Or are we going to get a lower high and have a deeper correction? So for me, there's really one or two ways. It could just keep rolling over. So if you're trading this index alone, I would be looking for a few more days potentially of some selling that's just running out of puff, and then starting to buy it on a rise, and then just watch out for that high, lower high, and just see where all the stochastics are based. But you know, ideally that trend hasn't changed just yet. I mean, I know it's had a couple of weekdays. Thursday night was a big one where it sold off, but maybe that's just a bit of heat coming out of the market, and then we hold these levels and start to go again. We'll just have to see. I still like to take my projections, say if that's from low to high, and we've had a minor lower high here, and then some consolidation through this March, April, May, and we've built a new leg up. If you project that low to high, it's still quite, potentially got quite a bit in it. If that's the case, so we could just looking for some targets where it could fall short. It could still keep extending highs, washing some people out on the long side who have tried to second guess the short, washing them back out of the market and keep head high, and then maybe just turn and build the lower high then. So you're always looking really ideally for a lower high for failure, or to go into a complex correction. Then you've got to adjust your view of it overall. But at the moment, that's still trending high quite nicely. What do we got there? The FTSE, the S&P, yeah, it's still the same case. Really that anchor to the uptrend is just down above 24. What are we, lows here somewhere around 2407, 2405. just above 24 is the anchor level. It's coming into a nice zone where it could potentially hold up for a higher low, continuation trade, and up she goes, takes out the highs, makes new highs. That trend is still up. If you draw a little support line across these lows, you've still got a bit of room to move, but it's still, the trend is still up. Just because of what's happened the last couple of days, nothing's really changed. Maybe a bit of opportunistic profit taking. And don't forget, you've got people at different stages of the trends too, and this applies to stock, share, anything you trade. People who get in a bit late, when it's getting a bit extended, are probably the first ones to start bailing. But then you've got people at different levels. So if you bought it through here and you're looking at just holding your stop at 24, you're up on the trade. No reason to bail until the overall trend is broken. So maybe that's just these people that have bought it the last few days, really hasn't gone anywhere. They've capitulated, they've rolled out of it, got out of it, gone back on the sidelines for more confirmation. Don't want to take too much risk on the trade. Maybe this is a good little zone for a continuation trade and up she goes. But like I said, that trend is still heading higher. So you just got to take into account what's happening at different levels of the market. FTSE, just quickly click over that. Not looking so good today. And that was pretty much on Friday. So you had a couple of down days on the FTSE. The last two, say up until Friday's movement, it was still potentially holding, but then you've just taken out Friday. It's taken out that 73.50, and we're right down at above 73, touched on 73 now. That's looking a bit weaker than the other markets. Maybe we hold up, we might wash out this zone and start building again. You don't know. Anyone new to this? I'd like to get in it just yet. It's got a history of, way back here, taking out the highs, pulling all the way back to a general support level, retesting that zone, and then going again. Nice pullback here, retesting that support there. Sorry, let me just mine it. Retesting that zone, like I said, just at 71. Got a bit of a history, and then bang. So that it doesn't break the trend up. It washes out quite a few people, and off we go. Maybe it's just going to do the same thing here. It's just washed out a few of these minor higher highs, like this one here at 75. Washed it out, and bang, straight back down to a key support at 73. We'll just have to wait and see if history repeats, and we hold that zone, and off we go again to new highs. Or, if we break straight through it, then there's probably room to be concerned there on that one. And the DAX. Your DAX is coming right into that support around that 12,000 mark, so I think it's at the crux as well now at the moment, sort of at a fork in the road, I guess you could say. Alrighty. Any questions just on those before we just kick over to some charts we're looking at? Well, I'll have a sip of coffee. How are we? How was the weekend, Paul? How are you going? You holding up, mate? Any news on the baby front? Still going nicely, I presume, being that you're here. Just going to get up a few things. I'll get up my little marker program. Well, there you go, mate. It's all looking good then. It was at 42 weeks, isn't it? 40 weeks, I can never quite remember. Oh, by the time you hit about 35 weeks, I was at a blur for me anyway. All right, what I want to have a bit of a look at today is, we call it the WM pattern, shoulder trades. I think it's a key part, like I said before, key part to trading. It helps you identify potentially when to get in the market, when to get out of the market, and then planning ahead and waiting for those zones. If you're looking to buy and the market's pushing lower, then it builds a higher low. As you know, if you're following the alerts, if there's trades that I like, they're looking good. I'm just waiting for a setup or a high low to build. I like to draw it up on the charts that we send out. As the price action or the price structure that I'm ideally looking for. So if you follow that, you probably would have seen a few examples in the past. And that's even planning ahead. If you get that sort of price action and you see it, then there's no reason why you shouldn't be jumping into a trade. So it's a key thing to look for. Key thing that we look for, and it's a really solid price structure or price action with a high probability for entering trades and also exiting. It's a key. If you get a lower high when you're long and you see this lower high build, and then once it's confirmed on the break of the low, which we'll draw up in a second, then it's a key heads up to potentially get out of a trade. And sometimes it's a really good opportunity to see as a short position too. So I'm not saying that we do that. Well, we probably haven't done it and I have done it on my own intraday trading where you're long and you flick it over and go short because of a lower high, say, and it looks like this could be a great a great potential trade to short something. So it's a good type of price action really to keep an eye out for. And sometimes, like I said, people who may have just, well, let's just draw it up. So you've got a market that's pushing up. You know, you get this market's pushing up. You got your key levels, obviously. That's what we call our anchors. But then when you get a tend to be a deeper correction, if we just draw that up. So this is your corrective action. If you break that down, so this could be a weekly chart, a daily chart. And if this is a weekly and you break it down to the daily, then you might get lower high, lower low in that chart. But we're looking for that weekly type of position for continuation. Now, if you pull back and you have a deeper correction than normal than what we've seen in the past, okay, one that's a bit of a heads up. That okay, there's a few more sellers coming in there, and there's less buyers. You can see that the shift in buyers to sellers is changing slightly. It's a very small thing to look at, but I mean, when it starts lifting again, you're still above your anchor. There's still no reason to get out at that stage. But what we may see coming, and what we look for, is potentially when you get it pop up, it really starts to struggle. And this is where I like to look at the stochastics and saying, okay, we've headed higher. Stochastics have gone from oversold to overbought to oversold to overbought as you do this. But when we get to a potential point where it's starting to look like a lower high, you get into stochastics that's, if we just draw it, you know, if we sort of go like this, it's pretty basic, and you get to overbought again, but it can't get anywhere near the high. There's a good sign. It's a good little heads up that okay, maybe we want to tighten things up and take into account that you've got a deeper correction too. And then, you know, once you get confirmation of break of that low, that's your shoulder trade. There's really good signs. So you don't know exactly what's going to happen from there, whether it just consolidates, goes sideways, or this is the start of especially if you had a good strong leg up, there's going to be a fair bit of profit taking. You have what we call, you know, we said before, your complex correction. There's more sellers that come in. It can keep you out of trouble. Maybe the market, you know, it can do anything from there. You don't know. Maybe it just starts building again. You get a bit of contraction there. And then we start building another major leg higher. Or this thing on some of the stocks we look at too, it's very important. If you're trading stuff that, just trying to think of an example. We'll show you a couple of examples in a second. Not your big blue chips. This type of structure for me is quite important because they can go up, have a good run up through euphoria. You know, it has been just recently the marijuana stocks that have really kicked on strong. They really rocket up. Then you get this lower high and you get a sharp corrective action, but then they go back to where they started and they can do nothing for quite a while. So if you're not taking note of this type of price action, you can get caught in a trade that's down on you for quite a while and it could just not come back for, you know, months or years. So it can keep you out of trouble by just taking note of what the price action is telling you. Does that make sense? What we're talking about there. So your lower high, sometimes you get a deeper correction to really start a bit of a heads up. And if you're long from here, you know, if you went long on this, you know, you're off your daily chart. This is a weekly chart. You went long. You got your setup. Your daily chart's pushed up. You've been in profit. It's pulled back. You may have taken a partial up here. Things are getting a bit extended. You may not have. If you've got quite a wide risk at that point and you start getting a deeper correction, then it pushes up, you get this scenario. You could just move it to break even, or you could really start to tighten up. It's a good heads up to tighten the ship. That doesn't make sense in English, but does that make sense? Just really start to tighten things up rather than keeping a looser risk management and try to really get things to run on. With this type of price structure, especially when it starts rolling over again and there's a good chance that that's your lower high, you confirmed on that breakthrough there, in that type of scenario, I'd just move my risk under there, take your small loss and then reassess it as you go, because from there you don't know what's going to happen. So generally when you get your lower high, for me, it leads me to believe that there's going to be lower lows, lower highs, and then you don't know where it's going to stop from there. You're best to take your risk off the table, and that's the way we attack it. Risk off the table and reassess it. Now, just trying to think this is a good example. This is West Farmers. If we just draw this up quickly. So any questions just on that price structure, what we're talking about, and this you're flipping it over in reverse. If you actually short something and you start seeing some higher lows like this, it's good evidence that this move down, this overall longer term move down, is starting to run out of steam. And you get your higher lows. It could be a good, risk reward trade when you're starting to buy on a break up, and then it builds, continuation trade through here, then so on, continuation trade, and up we go. We don't know what's going to happen from there, but then once you're in, you're trying to analyze the risk on the way out again. Here we're not extended on the upside. It's extended on the downside. Potentially we've got a good trade to go long. Buy on your break, you know exactly where your risk is, and then just analyzing it as you go up. Just follow, managing your risk is what I'm saying. Got your continuation trade. You've got one leg up, two legs up. We're coming to resistance. Then just try to go, are we overextended here? What's going to happen? Okay, it's kicked on. So be it. Then you just follow it as far as you can. Yeah, actually, Telstra, I think, is what I've got to talk about. So we'll go over Wesfarmers as a little example of... Actually, no, we won't start with Wesfarmers. I want to go over Bub as a potentially... That's probably a different example. Was it CVT? We just try to think. This was on the weekly. Okay. CVT is a decent enough example of, if we probably get to a daily, let me just check the daily. There's a lot of data in there, just trying to... Yeah, okay. That's probably better on the weekly, actually. It's a bit nice on the weekly. So this is as an example. What we've got here, if we mark this one up too, we'll just get out the magic pen and draw that up. Okay. All right, so what you've got the markets only my level. It's chopped around through here. It's pulled back, started to move, gapped up, had a pullback. Then you can see the momentum just really starting to pick up. This is a good correction, but this is the move. It's near vertical. It really rushed up there. So your key level is way down at that time, is way back here. And don't forget, this is your weekly chart. So it's had some really good, strong movement higher from basically around 17.5 cents, 17 cents, right up to close to 70 cents. So in the way of gains, that's beautiful. That's really nice. But this is the type of move that it's near vertical. It's quite steep. There's been no real pop up, pull back, consolidation, go higher. A nice even type of a trend like this. That's an easier trend to trade. It's been just bang, up we go, like we saw there. Let's get rid of all that. So your key level's way down here. So there's a lot of room to move. And the way I would view this on a weekly basis anyway, and this could be a daily chart, it doesn't really matter. It's the price action that we're looking at, what we're trying to analyze. For me, the way I would view this one, even on this leg up, we really haven't had many pullbacks. If we just look at it from here, we've had a push up, and this is inside the high. Bit of a pullback there, then bang, up we go, near vertical again. Tried to have a bit of a pullback. Buyers just kept taking control. Up we go. So at this stage, we've had 1, 2, 3 legs up on that one move up, if that makes sense when you break it down. Then it's had a couple of good weeks down. You can see this really strong move back down. It's tried to go again. So you're getting people probably stepping in here trying to pick a bottom, really. And this euphoria, they've seen this move up. They're starting to see, okay, we've got a green candle. Maybe I'll buy it and I'll pull back here, and they sit on the bid. However they trade it, I suspect the type of trading in there, you're trying to second guess yourself. You're not waiting for a solid setup. But then what we got, this has turned out to be that lower high that we said, and you've got a lot of room to move. So it's washed a few traders out. It's had a decent correction. Then people probably look at that first move down as, okay, that's a decent correction. Let's just sit on the bid here, or we'll just go and buy it. We've got a green candle. Next week, bang, up we go. They might be looking at a daily chart. And just looking to jump in and try to pick the bottom rather than let the price action speak for itself and try to work off your price action. They're just diving back in. It looks like, I guess what I'm trying, I'll probably have to go back into a daily chart, but what we've got there is that pushback. It's washed a few people out, and that we've got that secondary move, and that tend to catch a lot of people out. One move lower. Let me just, it's probably better if I can, where's that move? That's not the move, sorry. Just going to drill in on that a bit more. Whoop. Okay, so you can see, I'll get my drawing chart up. This is probably, this is CVT, by the way. All right, so you've had that, that's a good strong move up, you know, 1, 2, 3, 4. Basically, for me, your anchor's through here. What we've done, we've pushed straight down through the anchor. So it's a bit different to the price action we just drew up, where we've pulled back, built a lower high, and then gone. We've actually just gone straight through the anchor, popped back up. So that's another key little detail to take note of. If you're looking for a long position, we've broken through the anchor. So for me, it's a good heads up that I wouldn't be buying in here, because I'm expecting that to roll over and have your secondary, you know, move lower. So 1, 2. Does that make sense to you guys? But what we're trying to say, or what I'm trying to say in a roundabout way, is it's the shoulder trade. This is catching a few people out, that price action. They're trying to, you know, after seeing a good leg up, maybe they've missed it. Maybe they missed it on that leg up. This is where a lot of people can get caught when they try to pick, have a correction lower, and they try to pick the bottom, I guess. And there's a few buys in there, but if you don't hold your risk properly, and you're not holding it on a break through that low, potentially just around, I'll just draw that up, around this zone in here, then you're going to get caught out. And then I just don't think, way we would risk this trade, even if you bought it through here, for whatever reason, you got your setup, maybe it hadn't broken an anchor, you really got to know exactly where you want to place your risk, because these shoulder trades, they have deeper corrections, and from here we don't know what's going to happen. And if we go back to actually the longer term trade, yeah, look what's happened here. So if you bought it in here, okay, it's come back up. You've got a bit of positivity there, looking not too bad. Then it's roll over again. You got to a low down at 20. If you're not worried about where you put your risk and you're just holding it for whatever reason, longer term, whatever it may be, this is probably give you reason to be a bit more positive. But then it's just turned over and rolled all the way back down to 2.5 cents even, and it's sitting around here. So if you're holding it from above 40, you don't know how long you're going to hold these trades. So really, your risk is so important. And when you see these lower highs form, it's a very important part to our trading anyway, especially if you're actually long, to really start to tighten up your risk and see, just take note of what you're seeing. I hope that makes a bit of sense here, guys. I'll find some more examples. We've got, so that was CVT. Bubs, a slightly different. This is more in reverse. It's a hard move up, and it probably is not as hard as what we just saw there. But if we try to just drill down on this type of price action, this is a market, it's pushed up quite strong. It spent a lot of time consolidating. What was that, from about September? 1, 2, 3, 4, 5 months or so, 5.5 months till this point, holding up around those lows. But this is a major high low. Then you started getting this market popping up. It looked great, through here, little on a daily basis, that little high low just in here, and then it accelerated higher. That was quite a strong move up. It's all in context of that. So if you're looking at that and thinking, oh, it's a good strong move, you could be expecting this to be a lower high. But the difference in price action is that it's still held those higher lows as well. Spent a lot of time consolidating around those highs. So this is more of your shoulder trades in reverse, if that's making sense. So I like this type of price action. It's again, it's that secondary leg. I'm just trying to find out what we drew. Let me just get a I've got a screen snapshot here. It's your secondary leg in reverse. So we've had, whereas before when you get a good sharp move up, it's a bit of a washout. People try to buy it in here. You know, it pops up, builds your lower high, and then goes lower. So that's your secondary leg lower. This is more in reverse, and sometimes it can be a bit hard to get in when you've had a good strong move up. Consolidates around those highs, and then it has your secondary move. So your 1, 2. And there's really no reason to be too concerned with this one just here, although we didn't alert to this one. Great trade in hindsight, and it really did kick on strong. But hard right edge, when you're looking at it through here, that could have been starting to form your, you know, you've had a good strong move up, could have started to form that lower high, but it really didn't. It just did not take out that low. So what we would be looking for on confirmation that it is building a low high and potentially having a deeper correction and maybe even pulling it all the way back down to 15 where it started from. It just didn't play out that way. So that was what I'm saying with your two legs, just to take note of, is it's pulled back on this type of price action when it's gone up quite strong. It didn't even do it really in here. Built your lower high in here, but the lower high is confirmed on a breakthrough, and then you got your secondary leg, and that washes out a few more people, and then you maybe chop around here, hold, and then up we go again. This is pretty much in reverse, and so sometimes it's just important to take notice of the difference in price action. This is a lot different, this price action through, if we just clean this up again, this price action through here to here is a lot different than you would expect if it was going to build a lower high and really start to see some weakness. You can see that buyers were stepping in. It pulled up short of this low just in here, pulled up short, only just missed out on making that lower high, washing out that low, or confirming that lower high with a break through that support zone at around 25, I think it was, and then started holding some inside high lows, and then up she goes. Am I making sense, just what we're trying to say? With your shoulder trades and just trying to take note of what's happening. It's more important it's a really good management tool for the way down if you actually got long. I'll just let everyone just, we'll have a look at Telstra in a second there, Paul. I guess it's making sense, but we talk about that. We try to analyze this time and time again. It's a really good thing for us. It's a good part of our trading for lower highs, especially when the market's gone quite high. It's gone vertical. You know that you probably would expect some heat to come out of the market, and that's where in this type of scenario we would be looking for. And you've got this ever so slight lower high just in here. When it bounced off 20, people probably trying to pick a bottom there, especially after this move high. They don't want to miss out in case it's going to go to the moon, go up to $1. They don't want to miss out, but then they get caught being washed out of the market, and then you start getting caught in this chop. And that's why it's important to, if you're going to take a trade in here, especially after this move up, and that could be just on the back of news. I can't remember what happened there on Bub at the start of 2017. It's a good note. Okay, what's my risk at that stage? You've got the market starting to lift up again. What's my risk? Okay, the risk I'm going to get caught in chop if it pushes down through that low, through 20, which in hindsight it did. And then I don't want to be in it. I just want to reassess. And then if you just waited through all the way through here, you've got your little trade again on, when it's coming back out. You've spent a lot of time consolidating, and in essence, that's holding a major higher low on the weekly basis at about 12.5 cents. We're starting to look like we're lifting again, and that becomes on the weekly basis our secondary leg up. We've had one pull back, built a higher low, so projecting that. I know it's way down here. Projecting that, we've got a move up to 57, where I think it's potentially now we're starting to run out of steam. So it's those two. I guess what I'm saying is those two legs up and two legs down. So we've had, and if you keep breaking it down, that's 1, 2. So maybe we get a bit more consolidation through here. We might just start to spend a lot of time, pulling back, a more of a longer term correction. Within this one leg up on the weekly, it's two legs, 1, 2. Two legs down, 1, 2. This is not two up, pull back, popped up, had a secondary leg down, and then it started, chopping around and holding support. Yeah, no, you're right, Paul. It's even, I'm finding it quite hard to explain what I'm trying to talk about sometimes. But what I've always tried to practice, and what Davin's hammered home for me as well, and what he looks at too, is the shoulders. Trying to take note of the shoulders. So if you're trying to enter, if we were trying to enter here, for me, to combat the fact that I know that, if I just draw that up, so what I'm looking at here, the fact it's gone up hard. So if I was looking at it just in this spot, I know that it's gone up. It's had quite a good rejection off those highs, and it's pulled up short of 2. So this is why I always try to drill it up. I know that potentially that could be your secondary leg. So you've had one leg down. At this stage, if I want to trade it, I want to have high conviction that it's not going to have you, and we're actually going to have from this level a secondary sharp move higher. So I want to see really solid confirmation that's going to happen. So what do I want to see? I want to plan out my trades. I've got, this is, well, we get rid of that. So this is the 20 level. We've had a good move up. We've pulled back to 20, and we're starting to lift here. This is why I always draw it up what I want to see. I want to see it pop up. Maybe it starts to chop around a bit, but I want to see this, for me, on this minor high-low, is confirmation that buyers are stepping in. And potentially my thesis of a second leg higher is going to start to play out. And that's where I don't mind taking that risk. And I want to see exactly where my risk is going to be. And then I'm working off, this is my overall thesis, that we're going to have that leg higher. I planned out my trade in advance, what I want to see to combat that secondary leg move, secondary move lower. But I know exactly what I want to see. I want to see these inside high lows, and then once you start seeing evidence of buyers go in, then I'm happy to step in, take a chance that this type of price action or this strong move up is going to play out. Now, in hindsight, it didn't. We can see that. It's easy to see in hindsight, but this is what I would use, a type of setup I would use to combat being on the wrong side of the market. And we do get that secondary, washout lower of this move up, really washing people out, putting them back on the sidelines, which it did. Even if you held it, okay, it's a good, this is probably a good one to say, if you did hold that, if you did buy it in here, you did hold it. I don't know where your risk is going to be, but if you did hold it, it's paid off, it's paid dividends. There's times when it's not going to, and that's the whole point of trading. You don't want to put yourself, there might be, say 3 out of 5 times, you just hold it, it works in your favor, it comes back, you take a profit on it. There's going to be that one time when you really get caught, and you get caught having to take a big loss on it, which wipes out the gains from the other 3 trades, or it could be 2 out of 5 times, say, that you get caught on it, and they wash out any gains that you've had for the other 3 trades. Statistics we're talking about now. So it really is, for me, this is the part of trading. I'm happy to give up a bit of profit in here to see my setup and keep myself out of these type of things when it does move lower and I get that chop. I might have to hold it for a long time, and just wait to see a better setup. Does that make sense, guys? All right, let's just look at a couple more examples. I've done CVT, we've gone over Bub, we've gone over West Farmers is one more of a good shoulder trade. And if you were looking at this one, I'll mark it up. Actually, I want to mark it up without that. Don't worry about the volume. Okay, this is the price section I want to see. So I've got this. So if we draw this up, I'm trying to analyze it from before we got to this lower high. So if we're pulling back about here, okay, so the price action we've got at hand, what we've got to analyze, is on the left-hand side. All right. So if we mark this up, you're obviously marking up your key levels. We've got a key level of resistance potentially we're gonna come into contact with right up at around 46. Okay, we know our key support. So this is part of the art of, I guess, building a picture of what we want to see. This could just be range trading, we don't know, but just going, don't worry about what's happened in the past, but just going from what we see, the price action we've been given so far to work from. You can see it's moved down, had a good sell-off. All right, it's popped up, probably up here, and then it's come back down to support around that $40 mark. It's worked its way back up, took out the high here, but then it's come all the way back down. So as a long, you know that that's a good solid support zone at 40. And then we started working off, and we started, potentially you could have got a trade off in here as we work out the way up, but it's had 1, 2, we had a good correction, continuation trade in here. We've moved up. So we know that, okay, we've had 1, 2, 3 legs higher as we're looking at it at this point. Is it worth going long? Look, it could be. We don't know what's going to happen if we get our setup. But if we got our setup in here and we actually went long, where could our risk be? Okay, a risk that we could be getting extended on this move up. We're coming into that resistance zone. Okay, do you have to be on the ball, or should you open up the trade? For me, if I was actually going to if I did go long in here, whatever setup you're using, just say we bought it in here. Where's my risk? Obviously, if it breaks down through that zone of support through there. So that's my initial risk. And as it played out, we built that lower high. So if you build that lower high, you could just take it off early, but then you're running the risk as it does pull back here and then start consolidating, and then you get a good strong move higher, and that blasts through the highs. If we get this price action, that's a bit different to just building lower high and coming straight back down and breaking through that anchor level. But that, once we get a push through, just take that out, we get a push through these lows. Look, I'll draw that in a different color because this is your anchor. Push through that low, that's confirmation. You got your lower high. We don't know what's going to play out here. This is the anchor to the move up. So if you're buying it in here, you can either have your risk just below there. Especially, you could trail your risk, have quite a wide stop. You're trying to open up your trade. So if you bought it here, you could initially have your risk here. And then as you get this bit of chop action, you go, oh, it starts to roll over. Look, I want to tighten my risk up to here because I don't want to risk too much on that trade. Because if this is a lower high, just up here, I know that could lead to, who knows what it's going to lead to at that stage. It could lead to a major correction, and then as it played out, you got to move down. It broke the anchor on this move. It's popped back up. Then you could turn over and actually have a bit of a short trade through here. You get your anchor, a lower high just in here, if you can see that. And then it's actually worked out to be a decent enough short trade with your risk potentially up here on a break through this 43.25 zone. Played out quite nicely. It's come all the way back down to support. So what I'm trying to play out is just explain here is the lower high scenario. You've got to think in advance, not just what could play out. If I get my lower high, I know where my confirmation of the lower high is. It's a break through this 44 zone. What am I going to do if I get the lower high? What am I expecting if I get the lower high? I'm expecting either a deeper correction, which could be, it could just pull short here and start to, that's that move down here after we break up through, we break the anchor. We could just chop around a bit here and then we start building for a long trade. But I'd rather be out and reassess that as we go, even give up a bit on the trade for your second leg, and then, okay, maybe that works out well. And we go bang straight up through the resistance. We start in a new trend higher. We've got into a trending trade. We've had to take a small loss in the first go on this continuation trade here because we haven't had a complex correction just yet. This is a complex correction. As we pull back, build a lower high, confirmation of the lower high down when we break through the lows, we pop up. We're expecting maybe a deep correction. We didn't expect this, to be honest, but we're expecting maybe a complex correction once we get a lower high. I'm always expecting a complex correction. And then we start chopping around. So I'd rather be out, reassess it. If we get this price action, great. Have another go at it. If not, you're keeping yourself out of this move all the way down. So if you bought it through here, for example, you got your lower high, you didn't take note of it, and you go, okay, oh, it's not looking good here. Then it pops back up. This trade's looking great again. And then bang, that move all the way back down to 40. If you're holding it when you bought it through here, expecting that pop up through 46, what are you going to do? Where's your risk? I mean, where's your risk now? You don't, and this is where you happen. You don't want to lock in a losing trade. You don't want to take the risk of being wrong. You don't want to take a hit, and then you just hope. You're pretty much living in hope now that the market's going to come back in your favor, and you're probably just looking for a break-even trade now. But does that make sense, guys? Why it's a very important risk tool? This is a great example of why it's an important risk tool if you bought it here. Your lower high, your shoulders. If you see that shoulder, okay, bail and try to assess your risk. Assess the trade once. It's a lot easier assessing something when you're out rather than being in the market. I hope that makes sense. I'm getting a bit of a ramble here. A bit of a rant, sorry. So just taking a look at this now, Maybe we're finding support through here again. We've washed it out here. We're starting to chop around. Or, just look at where the stochastics are. Maybe this thing's going to topple over. We don't know here. We don't know if this is going to be a major lower high, this zone through here. But I'd rather be on the sidelines trying to assess it than in a trade that's against me. All right, and that's the beauty of technical and try to trade it rather than trying to pick a high, trying to pick a low, trying to guess what's happening. We say fading a long position. You're trying to fade here and expecting it to go up, and it doesn't. It rolls over on you. So I hope that makes a bit of sense to you. I guess I'll open it up now. I don't really need to talk too much about more. But if there's anything you want to take a look at, or you think there might be a good example of something playing out and what we just talked about, shoulder trades, anything like that, just put it into the chat now. AIZ would be a shoulder. Okay. Great work, Chris. Yeah, well, this, we'll just go back to what's happening on the weekly. Let's take off the thick. Yeah, look, it could be. There's no doubt about. And if you look at it from a weekly basis, just get me back here. We know that it's actually getting a good strong move up here. So the way I go and assess this, because I'm not in the trade, I don't know what's going to happen. I'm trying to figure out what is my possibilities, what type of price action am I looking for if I want to trade it, if I want to go long. I know what we've done here. We've gone up. Potentially it was going to be a shoulder trade here. Well, that's a shoulder trade in itself, but it's only off this leg. I don't want to, no, I won't say that because I'm going to get too complicated and probably overcomplicate things. This move down here, I'm going to start again. Sorry guys, I'm probably going to, that's a move up. You've got your little wash out of those highs. Then we've got a complex correction here. And what we're seeing now, the market's popped up. You're looking like this is a major high low on a weekly basis. We're starting to pop up. At this stage, we did pop up. I'm not saying we're starting to. We're getting a bit of a run on here, and then we've got this good accelerated move higher. This hasn't really contracted. This is a leg higher. We haven't really had any major pullback on the daily basis just yet. It got it a bit extended. This is a weekly chart, isn't it? Yeah, I've got a weekly chart up here. So this is a weekly leg up, a weekly leg down, continuation trade on the weekly. You're starting to get your secondary leg up. There's all different ways to. I like to use my volatility projections, if I can say it, of a leg up, trying to figure out where it could be going to. Is it worthwhile getting into it here? So there's all these things that are going to be in the back of your mind. We could be at a stage just up here. We haven't had a correction. It's had a good strong move up pretty much most of this year. Am I going to be getting in too late? Am I going to get in and get chopped out again? Or is it going to continue higher? You don't know. And that's what you've really got to assess as you go. Now, if we go back down to a daily, it could be. You're exactly right there, Chris. So for me, I don't like that. I want to get more of the chart. This... actually, sorry to get a bit slow. Let's just get this last price action. Let's drill down on it. All right, that's a bit better. So for me, with all that, taking all that into account, if I'm trying to set up a trade here, I know we've had that a push up, we've corrected down here. This definitely, I would sort of take that one there because we've retested that low. I take that as a shoulder. So for me, what I would be looking for here, are we going to extend it? So we've had one move down, pop back up. So we've washed a few people out, with this move down. We built a shoulder. I would take that as a shoulder purely because we've touched down on those lows. So I would sort of be expecting this type of move down, maybe to 250, for example. So I'm not saying it's going to happen. So what we've got to do is plan out what we expect. This is probably a really good example, Chris. Thanks for this, by the way. Really good example. So if that's the case, okay, you just don't buy and you wait to see something happen. But if you want to buy this, if you think it's really good for whatever reason and you're looking at buying it, you really have to plan out what you want to see in the way of an entry. So you've got a push down, pop back up. We've come back down to this support zone. So for me, if I want to buy it, this has to hold up. 280 has to hold up. And what's going to happen? I want to see obviously I'm looking for my higher lows. All right, so I'll be willing to take, you know, a trade if I see this type of price action. All right, so I've planned ahead. It hasn't played out that yet, but if I see that, that for me is some good evidence that we're starting to get those buyers step in. They're stepping in a bit higher here, again stepping in a bit higher here, and you can see the sellers are still taking control. They're still in control, but they're starting to lose control. And that's the whole idea of seeing these higher lows and then taking it on a break. As soon as you get a break out of a high, you know exactly where your risk is going to be. Just below the most recent higher low, you know where your risk is. We've got the breakout, and you know, in essence, what I would just take it through here. Does that make sense there, Chris? We've got it. This is, you know, a great little example. You've got your higher low here, and that's your 320 zone here. What I'm seeing here, if I get this type of price action, I'll be happy, because I'd see buyers stepping in, and sooner or later the seller's going to give up. They're not going to sell. Sellers are going to go on the sidelines and just wait to see. And this is, you know, a higher probability trade that this market's going to start kicking higher, and then you're going to start attacking that 345 zone. But that's a good example. So thanks for that, Chris. It is, for me, it is a shoulder trade. So I would probably be expecting the market to move lower, but if I want to buy it, I want to see this. All right. If it doesn't play out like that, and you got today, tomorrow, you just bang straight down through 280. Yeah, then you have to reassess it, and then probably what we'd be looking for is more. I want to see that's your second move down, and then I want to see the market start to hold up with buyers, evidence of buyers, you know, higher lows, buyers stepping up to the plate, and then away we go. And then from there, it's really just assessing where your risk is on the upside. Yeah, see, I like my stochastics, but they're all very similar, Paul. You've got RSI, MACD. I used to look at them a bit differently, and as I've come to, and this is probably a good example. If we go back, let me just stretch this out a bit. In the way, this is actually a perfect little buy entry. There we go. Thanks again, Chris, for another. Let me just take a snapshot there. I saw a nice little entry play out. So stochastics for me, and I like to use them, and it's whether, and I use them for the whole point, the whole kit and caboodle. If you've got a market that's moving higher, like we just marked up before, your stochastics sort of have to be flying, you know, overbought, oversold, overbought, oversold. That's ideally what I want to see, and I want to see when it's oversold, good time to buy. You know, sellers are running out of steam, but the price action itself is a higher low. You know, then I'll be confident to buy. Then I'll just wait for my setup, and away we go. Same with your MACD. But if you don't see that, you know, it goes overbought, and then it goes to, like we said before, it goes to, sorry, overbought, but your price actually saying, oh, hang on a sec, we're getting a lower high. We're starting to show evidence that it's a lower high. It's getting overbought. So that, to me, when I use overbought and oversold, is my mindset is how much pressure on the upside, how much pressure on the downside. Like you said, exactly with the RSI. RSI is, you know, strength indicator. It's an oscillator, so you want to see how much effort has it taken to get up there, how much effort has it taken to get down to a level. If it's taken quite a bit of effort, is there going to be more effort to, you know, in probability terms, is there more effort to keep it going? Is there more effort to break it through support or up through resistance? Is it going to take too much? Is it worth the risk in taking that trade? All right, so that's the way I sort of analyze with my RSI, not so much RSI and MACD, but my stochastics. Used to use RSI a lot, MACD a lot as well. You know, in essence, I'd use them all a very similar way. This is a good example of, I think Dave calls that your W pattern. So the market's, you know, it's been trending higher. You're starting to come off a good solid base, holding higher lows. Washed out a low through here, but the strength, and to come all the way back down, it's a bit of a washout. Then you've got a beautiful little entry after it retests that low. You can see with stochastics, it was a good sell. You can interpret that as a good little washout, worth taking the risk just in here. All in hindsight again, it's banged up through the highs, continued higher. This move down is what I love. It's very similar to this, except it's not a washout. Great little way, and then you're getting, the pressure was quite strong on the downside, and the pressure, if it's going to be negative, For me, it's got to come all the way back down and retest these lows where it couldn't. Buyers were stepping in higher, soaking up that selling, and you can see by the pressure of the sellers pushing it down by the stochastics, but the price action is actually at a higher point. So buyers are stepping in higher. They're starting to win out. Great little entry, that one there. If I see that, continuation trade, all in the zone. Your MAs are up. It's come back down. We say reversion to the mean when it pulls back to the MAs. You've got your zone through when it breaks up through that high, say at 212 on this candle here. There's your entry. Everything's lining up quite well, and then you can see it's taken a while to start running, but it's really started to run higher. If we go back to, that's just in here, and you can see, look at the run that it started to have. So that as an entry, beautiful. And then you can see here it's holding overbought, but there was no break in the downtrend. So you just follow it up, right up until potentially you've got a lower high here, or to what we're seeing here. So for me, I'm more expecting a complex correction now of this longer term trend up. All right, makes sense. Anything else you want to quickly look at? I've rambled quite a bit on this, but I hope it's helpful. If it's not, I know I'm chopping and changing. There's a lot of stuff going in my head that I'm struggling to get out. Feel free to send an email through if you've got any questions, or send an example of what you think could be. Look, I will get back to you. May not be straight away, but I will get back to you via email if you like. But if there's, like I said, Chris or Paul, if you've got any examples you might see as a shoulder, is this a good example? Is this not a good example? How would you interpret that? Look, I'll get back to you for sure. All right, let's just see where the market is at the moment. Let's get rid of that. Market's still, it's up a few more points since we started talking. Looking quite good. The XJO itself, I'm still a bit concerned. I'm not, especially after we got Friday's price action. Is this a weekly? No, Friday's price action. You can see that big red candle. It was still holding lower highs. The last lower highs at 5,800. It really did grind its way up there to 58. Bang, straight back down and straight through 57 in one foul swoop, really, or in 2 days, 2 candles. So to me, that's not looking too positive. But again, we're still holding in that zone between 58 and 57 or 56 and a half. 57, that support through here, resistance up through here. So there's nothing quite confirmed just yet. Yeah, a bit of both. If I can draw that, Michael, what we're talking about. I like to look at, I can't draw the stochastic. I've got to get my curly pen out. But say this, for example, I call that, I don't know if Dav does, but I call that, your W as well. And then actually here, this is the XJO. You've actually got what we call a W pattern there as well, and it's starting to pick up. Or sometimes you can be a move down, like we said, your 2 legs where they wash out more traders. You can get 2 legs like that, but your stochastics are starting to look, oversold, pops up. It doesn't quite go oversold again, and that's, you call that divergence, but in essence that's your W pattern. Well, and then you start to hold and go higher. So it's I guess you'd say it's horses for courses. You've got to try to interpret them together, and I think that's the key for me anyway, the way I look at things. What's happening here? You've got 1, 2 legs down, but the overall weekly support or anchor level to the uptrend is here. So this is really not breaking the weekly trend. It's just more of a contraction on your daily. We washed out a few more people just to get back on the sidelines for fuel to go higher. Then look at where your stochastics are. I don't like to see them in overbought territory, obviously, when you're down here. Does that make sense on that there, Michael? If we can go back to that, where were we? AIZ example. For me, that's your W pattern on your stochastic. You've got a nice little W pattern there. It's had a little dip lower. It couldn't go on with it. Price is telling me a really good sign there. Let's just try to think of another example. Not so much on that. Yeah, there's not too many examples just on that there. Any more questions, guys? Anything you want to have a quick look at before we call it a day? Just checking out the market at the moment. How's everyone going in the market at the moment? to be honest, it's a bit choppy. It's up and down, but you know, there's gains to be had. We did get stopped out of one today. It was SSM, which there you go. It's a bit of a different price action. You got it really just touched up, washed out those highs, really struggling up at those highs, and we just got a. This could be a deeper correction. We could have just got chopped out, and it goes off. Off he goes again. But be interesting to see how that one plays out. All right, we'll probably call it a day there, guys. Yeah, no, it is, Paul. It's. I know you're waiting to go into the market, but it probably was looking not too bad a few days ago, for me anyway. And then yeah, we had a good down day. I mean, maybe that's just going to be taken by the market as just, you know, another North Korea. They're starting to ruffle people's feathers, especially Trump. He's getting a bit agitated by the sounds of it. Or maybe this is going to turn to something a bit different. And again, you've got to take into account what's happened in the past. The market's gone quite hard, so it probably was a great opportunity to take some profits if it could have turned into. But if not, you know, just go again. You jump in again. You can't lose if you're booking profits. We'll have to see. There's still some time to play out now, but yeah, it is frustrating, this sideways market. How long has it been playing out for? Pretty much June, July, good part of 2.5 months now. Remember way back here I said if it breaks up through 58, this could be a nice little continuation pattern. Then we got a shoulder there. You know, that's a shoulder trade there. When you pop up, you get your shoulder here, it breaks through here, then okay, we're going back down to support. Grinds its way higher. Not really shoulder just in here because it has to. Well, it did break through that support there. These lows from start of July. But really, for me, what I want to see now to be really positive on the upside, I want to see it break through 58, then have a decent correction and build that shoulder trade on the way up. I'm just trying to think of a little example. Oh, yeah, probably here. This is a good example of a little. It's only a very minor shoulder trade. This was on the elections when we touched down on weekly support at 50.50. We popped up, we pulled back, we built that shoulder. So when it broke through that high there, that for me was an ideal little long setup. If you're going long, or time, you know, we start to get into a portfolio, build some shares, start to buy, you know, to go long some shares on this little shoulder here. So a little heads up. For some, it might be an aggressive trade, but I think it's a very important thing to take note of. Now, what I'm talking about there, and it's another good example of a, you know, your M pattern, is this little pullback. All right, let me just try to, just in here, I'll draw it up for you quickly. You know, when you got to have the context of the market, and this is what I talk about prepping. I think I've talked about it in the past. I've talked about it in the past. Prepping a market, knowing I knew at the time that was a solid support. We built a lower high here, actually. All right, that's a lot better. Just want to quickly show you this. I'll get right into my technical analysis if no one noticed. So we've had this is a major support zone for me. You know, we've contracted low, so that's your key support. We've had a move up. Then we started, you know, really struggling around here. We built that lower high. We had a move down. Then we built another, you know, major lower high. Good pop up. But it is all in context to this leg higher, so nothing's broken. There's no need to be a complete bear on this market. It really is for me at that stage. You know, if you're looking at it around here, or even through here at that stage there, it's not to be a bear. It's more just to be, let's just wait and see what happens. The longer term trend is still up for me. We may just be chopping through here. We built some lower highs, but we haven't broken a key level, which was way down at 50.50. This was the election, which pretty much touched on that, and that's where you started getting that higher low. And after that little break up through here, that was a good point for me to start to get in. You've got a double bottom here. That support has proven to be, it's been tested, retested, and then you've got a higher low, a shoulder just in here. After all this price action is ideal. I really liked that at that time anyway. Now another thing I wanted to show you, just remembering all this price action in this zone just in here, got a pullback, pop up. This is your secondary leg high. It's washed out that low, but it's all in context of that higher low just in here around 5,300. So it's a very similar thing. That uptrend hasn't broken, washed out a few people on the secondary move lower, and then bang, you've got that move higher. So sometimes you've just got to be wary where it could get you out. This type of price action could easily wash you out if you've got really tight stops, but you've got to remember what it's in context to, and that's your anchor to this up leg here. You've got 1, 2, we've just contracted lower, and then off she goes again, but we did it with rather than something like this, we've had a secondary move higher, that little washout, that M pattern, and then off we've gone again. All right, so that was just I thought I'd just share that with you before we headed off, but I better call it quits there. Thanks very much for joining us, guys. It's been great. We'll see you back in on Thursday. Like I said, if there's any questions you've got from a technical point of view that you just want to take a look at, or if this didn't make a lot of sense to you and I was rambling, I was jumping from one thing to the other, feel free to send through a chart. Just mark it up, ask the question, put it through to support@tradesetup.com.au or support@tradedirect365.com.au, and then I'll get back to you. All right, so thanks for joining us, guys. We'll see you back in on Thursday at 12:30. Cheers, bye.